Tobacco farming, the mainstay in Malawi, in Zimbabwe, potentially in other countries like Tanzania. But where does it fit within the matrix of soft commodities that we see coming out of Africa? Because we see a lot of agricultural products leaving, but we seldom discuss tobacco.
Yes, I mean, if you have a look at Africa, most of the soft commodities which are being produced are being consumed locally. Tobacco is perhaps one of the fewer, or tobacco and horticultural products is one of the few commodities which are actually being exported. So it is a very important commodity from an African perspective because it generates currency, and if you compare it in price to maize and other commodities, it does compare more favorably.
All right, now in Malawi in particular, which is a major contributor of burley tobacco to mainstream cigarette products that exist in the international markets, we see tobacco being disproportionately weighted in favor of the Malawian economy, for instance. 75% of the population involved in one way or another in the tobacco sector. Over 70% of exports from Malawi are tobacco related. 35% of GDP is from this sector, and yet globally, in terms of Malawi's contribution to the trade in tobacco, it's less than 6%. So it seems as though a heavy reliance on Malawi's side.
Yes, by all means. I mean, as you say, Malawi is heavily invested into the tobacco sector, and you know, if you have a look at Malawi, most of the availability of currency revolves around the tobacco exports. So it would, I mean, that's perhaps the first thing about Malawi. Second thing, what the government has done very well in Malawi is that they have increased their production of maize. So in terms of gaining food security, which has been positive. However, there is a massive diversification process which needs to take place to generate currency. We've seen the uranium mine come on stream. That is not producing as much. Uranium prices are also not as high as they have been in the past.
How stable is the trade if a country is going to be so heavily reliant on tobacco for their foreign earnings, for jobs? How stable is the trade to sustain that?
Well, if you have a look across Africa at countries like Zimbabwe, Zambia, typically all the tobacco which is produced on an annual basis is sold and exported. So it is very stable. However, if you have a look at perhaps using Malawi as an example this year, production is lower at approximately 184 million kilograms, and prices have also come down. I mean, this is not typically the type of situation that you would expect in a free demand supply situation where cigarette prices all around the world aren't getting pretty much cheaper.
Okay, neighboring Zimbabwe also is a major producer of tobacco for export. We've seen GDP in Zimbabwe improve significantly, 5.4% for this year. The Treasury is expecting it to be above 8% next year. Within that is improvements in mining and improvements in agriculture, of which tobacco is a major component. What do you make of the industry there?
Yes, Zimbabwe has had a big revival in the growth of their volumes on an annual basis. I remember last year, 77 million kilograms of Virginia leaf was produced. This year, the number that's come in is 122 million kilograms. So, I mean, that's about a 60% growth. Going back to 2000, Zimbabwe was producing over 200 million kilograms. So they still do have a long way to go. However, it has been very positive and is obviously influencing the GDP.
But there are a lot of risks, and not just peculiar to Zimbabwe. Within the region, environmental issues like heavy rainfall decimates crops, for instance, and insurers are loath to protect the tobacco producers. Why is that?
Well, it's probably more of a case of over-reliance on weather and rainfall. In the past few years, we have seen in Malawi, for instance, a massive or a very good rainfall. However, in the last year, it's dropped down a little bit. So these are factors which are tobacco production is heavily reliant on. Insurance in Africa, or crop insurance in Africa, is really an undeveloped market, and we'd love to see new parties and new companies coming in there.
All right, moving further afield, Tanzania is calling for a boost in production earnings from 20 million to about 38 million in 2010. But for this to happen, banks are saying for us to provide you with loan facilities, we want to see greater synergy between the growers and the processors. Now, if you just apply that scenario into other producers, what is the problem here?
Yes, from a financial perspective, it always makes sense to amalgamate and to form associations and growers associations and production for the benefit of economies of scale. Tanzania is a great example because they've basically been increasing or doubling their production on an annual basis for the last 2 years. However, it's the peasant farmer or the small-scale farmer that in Tanzania that needs to find the financial means to do this. So the formation of associations would positively impact.
So in an event that there are formations of associations and there's just better organization, how do the farmers then access the markets? Because we're told that there are a variety of mechanisms through which tobacco is sold. Currently there's the global leaf processing system where major buyers like BAT come into the market to buy, but there are also auctions, but those auctions are subject to regulations and restrictions on how much you need to have, no less than 100 kilograms, for instance, when you come to the auction. How can local producers, especially the smallholder farmers, leverage their input in these transactions?
I think it's important that you do have rules and regulations, but the formation of auction floors and auction houses that are there to facilitate the trade transaction between a small-scale farmer and an international trader of tobacco is very, very important. Also, what that does is it gives bankers and finance providers the opportunity to tap into these economies of scale, and where it makes far more sense and it basically provides a means to finance a pool of producers rather than a single producer with 40 bales of tobacco.